Welcome to this third session of the series of sessions on bank audit. The first 2 days have been eventful. Yesterday, Ravindran sir spoke about these various aspects, the care that is to be taken in respect of the NPA classification, etc. Now today, Sandeep Welling sir will be dealing about the parawise discussion or analysis of LFAR. We are joined by CA Naresh Gelli sir, Secretary SARC, and also our Chairperson Madam CA Geddam Sitashiri Madam, our Vice Chairman CA Narendra Babu, our Sikasa Chairman Jayant Upuluru, and our Managing Committee Member Vemur Veerapavan Kumar. So friends, we will start the proceedings with the motto song. We need not stand, but as a mark of respect, we can place our hand on our heart. Give me a second so that I will initiate this.
Yaesha supteshu jagrati Yaesha supteshu jagrati Kamam 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 Purusho nirmimanaha Tadeva shukrada brahma Tada brahma Tadeva amritamucchate Tasmin lokaha shataha Sarve tadunatyati kaschan Etadvaita
Over to the Chairperson Madam for her opening remarks. Madam, Shirin Madam. GSR Garu, you are welcome, sir.
Thank you, sir. Thank you very much.
Gelli sir is here. Sandeep sir is traveling and he has switched off his video, but he will be joining in no time.
Okay, sir. And he told me that he went to Bombay and he will be with us since 5 o'clock, but his video will be off for the time being.
Yeah. Once I reach, I will switch on, sir.
Definitely.
Yeah, thank you, sir. Sandeep, sir. Thank you.
Yeah. Over to Sitashiri Madam for her opening remarks.
Respected Chief Guest of the Day, Secretary of SARC of ICA, CA Naresh Gelli sir, and today's resource person, CA Sandeep Welling sir, and my colleagues in the Management Committee, and Vice Chairman of the branch, and my dear fellow members, a very good evening to one and all. Yesterday, we were glad to be addressed by our Vice Chairman of the SARC, CA Pannaras sir, and Ravindran sir session was very much informative. And members, if you have not able to join, please follow our YouTube channel, Vijayawada branch of SARC of SAA. We will upload all the videos of our VCMs. Okay. Today's session will be on LFAR, parawise reporting. As you all know, LFAR means long form audit report. The overall objective of the long form audit report should be to identify and assess the gaps and vulnerable areas in the business operations, risk management, and the compliance and efficacy of internal audit, and provide an independent opinion on the same to the board of the bank. We will be having many doubts usually on LFAR reporting. For example, whether if any deviation is found, whether it should be reported in LFAR or MOC likewise. So our speaker is Sandeep Welling is with us to clarify all the doubts. Thank you, one and all. Okay.
Thank you, Madam. I request CA Veerapavan Kumar Vemuru, Managing Committee Member of Vijayawada branch, to say a few words about our Chief Guest, CA Gelli sir.
Thank you, sir. Thank you for providing this opportunity. It is my privilege to introduce the chief guest for this today's seminar, CA Naresh Gelli garu. He qualified CA in the year 1992. He did his articleship in Messrs. PVRK Nageswar Rao & Co. Hyderabad. He is in practice since 1992. He signed the 100th balance sheet of Indian Bank as Central Statutory Auditor in the year 2007. He has rich experience in PSU audits, bank audits, statutory audits of companies and firms, etc. He is in ICA activity since 1994. He was the chairman of Hyderabad branch of SIRC of ICA in the year 2001-2002. He was in the regional council from 2006 to 2015, 2018 to 2021, and now 2022, 2025. During the year 2021-22, Sikasa got the Best Students Association Award on All India basis. On 17th February 2022, he was unanimously elected as a secretary of SIRC of ICA for the year 2022-23. He has completed the certificate course on concurrent audit, FAFD, and also qualified post-qualification course DISA and independent director exam. He is also a member of Federation of Telangana Chamber of Commerce and Industry for the term 2019-21, 2021-23. He was the president of Hyderabad Management Association during the year 2010-2011. With this brief intro, I welcome CA Nareshchandra Gelli garu to this webinar.
So, Chairman of Vijayawada branch, CA Sritya Shirin, all the managing committee members, speakers, CA Sandeep ji. Good evening to all the members who are participating in this webinar. Today's topic is one of the very interesting sessions because unless we are very clear as what is the requirement of each of these paragraphs of LFR, so I think we'll not be able to justify our job as a branch statutory auditor. Friends, actually, I'm in a part of a webinar seminar at physical seminar at Hyderabad on the same topic of bank audit. So it's very interesting and fresh learnings from the bank audits, and we're all getting prepared to receive these appointments in maybe next few days' time. So this topic of LFR is much awaited and much interesting because there are some changes I've been hearing here also. And unless we are prepared, though we do on a yearly basis, though we do an audit on a yearly basis, bank audit in particular, but unless we refresh, I think it's not proper for us to go and do an audit. All the time, members attending various webinars, we talk about what to do. So probably I would also like to add what not to do, because as a regional council members have been hearing about various situations members do. So I would request all members to make it a point to actively participate in these webinars, understand what are all the requirements which are expected from a professional when we do an audit, when we give our audit reports and LFR, and also make sure that you do a hands-on job for some time, for 3 to 5 days. We keep hearing, probably as I said, a couple of points which we should not do. We keep hearing there are members who do an audit in half a day, quarter a day, 1 day. I don't think there is need of those people in the profession. Ultimately, it is the profession which is getting hurt by these few people. And when the council members go to RBI, whenever our members go to RBI for revision of fees, the files which are put on the table is these cases. They say your people have done for half a day. So what is the need for audit? So maybe 1% is doing the job, that sort of a job, but 99% of people are getting affected. And Institute has been chasing for revision of fees for last 8+ years. So in these 8 years, the problem we are facing is because of these situations. So speakers from all over, say Sandeep is addressing us from Delhi, Bombay. In Hyderabad, we have requested a couple of speakers from Ahmedabad, Bombay. We also had Amarjit sir coming from Delhi. So much of rich experienced speakers are coming and sharing their rich knowledge. I think at a personal level, not as a regional council secretary, I'm talking. At a personal level, I think either we do a sincere job and get the assignments on a regular basis, or those people who are doing those sort of audits can better surrender their membership. I don't have any issues in saying that. But ultimately, friends, who is affecting? It is the profession which is affected, not that one individual who is doing the job. So it gives me a lot of anguish when we hear situations like this where it's a whole profession is getting affected by these small few people who are creating trouble to us. Lot of members, lot of senior members in particular, await for bank audit. For at least there are so many members who are not been allotted for 3 years and 4 years. So those who get, if they can do a diligent and a sincere job and give a proper report. So when we go, I know very clearly we are giving very short time, 3 days to 5 days. So we are having sessions where we are using the technology. In SIRC also, we had 2 sessions of 2 days each on bank audit. And we are also having one more session coming up on 20th, where we are talking of use of technology in terms of compiling the data, analyzing the data, and giving reports. So I'm sure the speakers for today and maybe a couple of more programs which the branch would plan. And also at SIRC, you can please reach that. We will also circulate those messages. But ultimately, the benefit is to the member. It's not a branch or regional council. Unless member is updating with their skill and knowledge, I think it's not worthwhile doing an audit. And refreshing of that knowledge is what the branches and regional councils are doing. So we need to please refresh, understand what is the requirement, ensure that we do an excellent job. It's not even proper. I think we should do an excellent job in compiling the reports and giving an audit report. So audit is one aspect of it. Analyzing the financial statements and doing IRAC norms, application of IRAC norms, giving a LFR report. These are all very essential for us. And I'm sure the speaker of the day, CA Sandeep Ji, would take you all through a very detailed discussion on all the paragraphs. What is the data that is to be compiled in that? What is the type of reporting we need to give? And this is one of the very few sessions or topics which I've heard. So much of depth is given for LFR. I'm sure the Vijayawada branch managing committee has thought it fit to have a detailed deliberation on this aspect. And I congratulate all the committee members for visualizing the need for such a detailed analysis and also identifying the speakers and requesting them to address the members. So I wish all these members all the best for their bank audit. As I was told and as I've heard in the morning at Hyderabad, the allotments are expected either this weekend or next week, first Monday of next week. So I think these sort of sessions would help members across South India, if I can talk, to refresh, update, and upgrade, so that we are ready to face the opportunity which we get on first week of April. I would like to thank the chairman, Madam Shriti Sarin, for giving me the opportunity to address the members online, and also all the managing committee members for this great opportunity. And I thank, on behalf of SIRC also, I'd like to invite say Sandeep Ji at a future date in SIRC to address the members on a topic of bank audit. So thank you very much for giving me this opportunity. Thank you, Chairman.
Thank you, sir. Gelli sir, we wish to continue our partnership and we seek your support in our future endeavors and programs also, sir. And
thank you.
Dear Sir Garu, if you are there, a word of thanks from you. Dear Sir Garu, if you can switch on your video. Right. Thank you, sir. Gelli sir.
Thank you. Thanks a lot.
We will meet you next time. Right. Friends, we will be quickly skipping into the technical session by CA Sandeep Billing, sir.
Before that, please make announcement of about the medical scheme.
Yes. What to the chairman, madam, to make an announcement. Please go on, ma'am.
Members, we are organizing medical camp in association with Top Star Hospitals, under which members and staff of the members and family members of the members and the students will be availed consolidated health checkup package, consolidated comprehensive health checkup at a concessional cost of 1,500 rupees. And it will be started from 17th March to up to 31st March, and we have sent already the flyers in the WhatsApp groups and Telegram groups. Please avail the opportunity. Thank you.
Right. Sandeep sir is a partner in Ittane and Pandit LLP Chartered Accountants. He heads BFSI service sector for the firm and is in charge of the Mumbai office. He has over 30 years of experience in assurance practice, and he is also experienced in assisting banks for risk management, IFC implementation in major public sector banks and private banks. He is also experienced in restructuring and turnaround strategies of banks and forensic investigations of bank or specific transactions of a bank appointed on the instructions of RBI. He is also an expert in borrower restructure and feasibility exercise on behalf of the bank. He is a speaker at various conferences and seminars, national as well as international, particularly for banking sector. And he has been a member of various ICA committees and expert panels that deal with various regulators relating to business laws, especially with RBI for the last 12 years. He is on ICAI AASB board that issues pronouncements on all audit related guidance to the members. With this brief, I leave the virtual floor to Sandeep sir to take this session forward. Over to you, sir.
Yeah, thank you, sir. Thank you for the introduction. At the onset, I thank Vijayawada branch for inviting me for such a nice session. Prior to me, Naresh sir, when he spoke, I genuinely appreciate the way he explained, and I also empathize with what he said, because yes, we do experience such issues as CSAs of various banks. So on this note, I would like to get started. Can I share the screen?
Yes, please.
Can you see my screen?
Yes, sir. It is flashing. Maybe it may take a while. Yes. Now it's okay, sir.
Yeah. Sir, before I start, I would like to just share a few aspects of LFAR. Then I will take you through the individual clauses.
Right.
Generally, my observation is, LFAR is considered a formality. When we first go, we attack advances, IRAC, and at the time of conclusion, we realize, oh, LFAR also has to be filled. So many times we take the previous year LFAR and then just see, many times we copy paste or we try to go from last year's page to next year. And this is where exactly RBI has been catching us as professionals, as auditors, all these years. And this has become a very crucial document for auditors, because howsoever good audit you may do, you are seen through this document called LFAR. That is the document that reaches the regulator, and they assess our performance only through what we have mentioned, how we have presented ourselves in LFAR. And therefore, it's very important for us to understand and how each and every clause should read each and every clause and take it forward. So as many as questions that we generally keep on asking on IRAC norms, I think answering the clauses of LFAR also, we should keep asking the questions to expert committees at the time if you face any difficulty. So with this note, I will get started on the next. Before we start, again, the master circulars of Reserve Bank of India, then closing circular is always circulated by the each public sector bank, or every bank circulates the closing circular. which gives a very detailed explanation on each and every aspect that need to be closed at the year end. And of course, guidance note. Sir, I would like to tell you here that Institute has been taking in terms of updating it every year, the kind of debates that take place, the kind of suggestions that are invited and incorporated. No, it's really spread across the nation, where the suggestions are taken from various members, and therefore it is a very rich document, which actually will tell you almost 98% of the problems that you may face during the course of your audit. These are something which you must have when you are on the audit. Again, during the course of our profession, we have experienced certain concerns raised by the RBI, because RBI keeps on meeting central statutory auditors every quarter and they keep on giving specific upfront instructions on how auditors should go about based on their assessment. So these are some of the aspects. Now, we all of us know that there was a circular from Reserve Bank of India last year that all the banks were expected to completely seamless work on the NPA calculation. It is expected the entire NPA calculations will be without any manual intervention this year. The last date for that implementation was 30th June 21. All the banks must have already concluded on that, and not only that, they have also undertaken this special investigation on the systems, whether it functions rightly. So based on this, it is necessary that slowly majority of the jobs that were being done by us through interpretations are being taken care of by the system, and therefore our reporting, our kind of a sampling would really matter a lot, and the quality of audit is really expected to enhance through these measures which are taken. Now, with these measures, RBI keeps on saying, yes, now majority of these aspects are being taken care by the system. So what is there for audit? The auditors are now slowly expected to read between the lines and go beyond the circulars to understand whether there are any suspicious items. So I will, during my presentation, I will give you some data that suggests that, at many times the account was running fantastically well until say last month, and next month it suddenly becomes a loss asset. The reason is we fail to sometimes take those signals, although financially and the parameter wise the account is running well. So this is what suspicious items reporting. Imagine RBI is saying this. RBI is saying when they conduct audit, some issue arises in a branch, then they ask auditors to produce their data or produce their documents. And they have specifically mentioned here that external confirmations are generally not obtained, and audit sampling SA 530 is not clearly documented. And therefore, based on this observation, you will see LFAR has been changed now to ensure that those documentations are mandated. This is one thing which all of us, I would like to know. See, IMF World Bank recommendations to RBI on RBI having explicit authority to access working papers of the auditors. Now imagine our institute says working papers are purely our domain. So it is institute which is protecting us all this while so far. But there may be a time if things don't go well, they will live this well and they will say no, because the recommendation is already on their table. Now, what I have done in my presentation, LFR was changed last year. So LFR was last 30 years was going with the same clauses, and therefore quite a few clauses that were in the LFR were pertaining to manual era, and that's why LFR was becoming redundant. And RBI, after a very detailed deliberation with institute, they have come up with this new LFR last year onwards that is quite detailed and actually nails down quite a few of our opinions. We are not given room. So besides, our main audit report that we signed, if you really look at these clauses, you will realize that there are a lot of things which we are indirectly reporting, and that by eventually certifying to Reserve Bank of India. So what I have done, initial cash and all, I have not included in my presentation because there is no change, and it's basically about cash and the insurance thereof, which all of us are aware of. So I have started with the changes that have taken place in LFR, which are actually important from the purpose of deliverance of our audit. One important change in terms of LFR is, earlier we used to get data of 2 crores and above, which has now been changed to 10 crores or 10% of the branch exposure. So if some branch has an exposure of only say 50 crores, then 5 crores would be the benchmark. But otherwise, it is 100 crores and above, it is 10 crores only. Now, the first starting of this LFR of advances, it says that you actually list down in LFR the samples that you have chosen for the purpose of your audit. Account name, balance as at the year end, funded, non-funded, total, the total outstanding of the branch, and percentage examined. So imagine, by simply we giving this particular table in our LFR, we are committing the percent and we are committing the accounts. So the accounts you have chosen, you have listed. If there are any issues tomorrow, yes, RBI knows, because it so happens that many times auditor would say, oh, that was not part of my sample. So which is why RBI now says, no, give me the list of accounts that you have taken as sample for the purpose of your audit. So that's the first change, important change. And quite a few of your observations or the answers to the clauses in LFR would be with respect to the items or accounts that you have chosen for the purpose of audit. So remember that. So you are responsible for the sample that you have chosen, which of course should be as per the institute norms and based on the criteria given by the Reserve Bank of India. So I'll move ahead. In a credit appraisal, if you look at the first clause talks about the quick mortality. Now, it may so happen that account shows the sign of weakness in the first year itself. Now, such accounts generally, if the account goes bad in the first year, the sanctioning authority is subjected to some kind of an investigation, and therefore they try to push this beyond 12 months. And therefore, any account that goes into SMA category in the year of sanction, in my opinion, should be part of our sample for us to understand, whether the weakness is really seen, because in the system it will not become NPA, but it shows the weakness. This is where RBI says you need to be little extra diligent, and you can't be merely following the letter, which is why the problems on the frauds are being taken up by the Reserve Bank of India. So quick modality: account number, account name, and balance at the year end. So if you have any weakness in the account in the first year, so whatever samples you have taken for the purpose of the current year sanctions, if you have taken, and if that account is showing shown in SMA, that should be part of your sample. Whether borrower account, the applicable rate of interest is correctly fed into the system. Now, all of us are aware, and which I will be covering later, but at the same time, now that we are on the topic, all of us must be aware that Reserve Bank of India also mandated IFC, IFCO-FR for banks from last year again. So what happens? Some banks are getting IFCO-FR certification from all the branches. Some banks are selecting few branches. And if you happen to be the branch which is selected for the purpose of IFCO-FR reporting, then this aspect would automatically be taken care of, because this is one of the critical aspect in the actually finalization of or reporting, rather not finalization, but reporting of the financial transactions. If the interest rates are not fed in rightly, so we need to choose few accounts, or the accounts that we have chosen for the purpose of, we need to see whether the sanctioned rates are matching with the system rates. If the changes have taken place, whether changes are actually sanctioned properly. Next. So whether the interest rate is reviewed periodically as per the guidance. Now, these are some of the aspects where any change, if the interest takes place, we'll have to. Now, at a SBI level, we may not be able to check the system logs, but we may be able to check the documents available with the branch. Yeah, somebody has raised the hand. Hello? Can I continue?
Yes, sir.
Yeah, okay. No, I thought someone raised the hand. Okay. Now, have you come across frequent renewals, rollovers of short-term loans? Now, Reserve Bank of India is very clear that the rollovers cannot take place for more than 2 times. Now, if such a case is there, if you come across such accounts, will have to be specifically looked in. Whether correct and valid credit rating. All of us are aware that as per the for the purpose of CRAR calculation, any account where exposure is 5 crores and above, it is necessary that the credit rating is essential. Now, though, they ask for after the debacle of some of the companies in credit ratings, banks have a policy that they take credit rating from 2 different agencies and compare it. Unless you have specific exemption, and that exemption is available only to government companies. All other exemptions are not considered valid. And therefore, 5 crores and above, A, we should have right credit rating, and B, it should be a valid credit rating. In a sense, it should not be expired one. In the cases examined by you, have you come across the instances of credit facilities having been sanctioned beyond the delegated powers? Are there, and if such thing happens, whether they are reported promptly? Now, you will rarely find this, because the systems now don't allow you to sanction. However, there could be a possibility, seldom, and therefore Reserve Bank of India has continued this. Otherwise, we were of the opinion that with such a stringent system norms, this is not possible. But Reserve Bank of India wants affirmative confirmation from the auditors that yes, they have not gone through such a situation. So there are quite a few affirmative confirmations that we give through this LFAR. You know, whether the advances have been disbursed without complying with the terms and conditions of the sanction. Now, in fact, I'm just out of a bank where I was discussing with them. Now, even with the bank that they have appointed me just now for the purpose of this IFCO FR, we realized that, if it is a secured loan, for example, the other fields are not mandatory in the sense to put security date, the disbursement date could be beyond, the security date could be beyond disbursement. No, such vulnerabilities continue to be there in the system. And therefore, the branch auditor actually assumes a lot of importance in this entire progress. And Institute has been harping on the branch audit only because of such aspects which are actually not possible at the central level. CA Ramakrishnan sir has raised hands. Do you have any question? K. Ramakrishnan sir. Okay, I'll continue. So, even though systems are there, generally we think that systems will take care. No, these are the aspects that need to be taken care of. This exactly was the point just now I was discussing with the bank I'm out of at the moment. So, at least in the cases where you have chosen the account, see to it that these aspects are taken care of. Did the bank provide loans to companies for buyback of shares? No, this is prohibited. So in such case, it's my suggestion that the management representation be taken, because it is actually difficult for auditor to specifically give such affirmative confirmation, because even if bank gives, it will not be clear on what they have. It could be unsecured loan sometimes, or it could be something they have given for lab they have given and it is being used for the purpose of this. You won't know what discussions have taken place, what ultimately will emerge if something goes wrong. And therefore, my request and my suggestion to you would be to comply with this clause. We should take the management representation letter specifically. Don't just rely on our audit procedures, because we cannot be sure of our conclusion. Next. Now, under review and monitoring is the procedure laid down by the controlling authorities of the bank for periodic review of advances, including periodic balance confirmations, acknowledgement of debts, followed by the branch. Now, if you see that there are reviews pending, here they are specifically asking, now this particular clause may not be applicable only for the accounts you have chosen, because this is a generic clause and therefore would apply to a branch. Now there could be situation, many banks, large banks, if you do like State Bank of India or PNB, I have seen their system has configured that yes, short reviews more than 2 times cannot be done. If a short review is done, the short review has to be specifically mentioned in the system. But many other banks have not yet actually taken up that. Maybe with the automation which was mandated by Reserve Bank of India this year, they have concluded on some of these aspects, but you should take care and ensure that it happens. Don't rely on a verbal confirmation that it's system based, because many times branch manager would say, "वो IT करने कर दिया है." No, IT has done it. They have given me certificate that IT has taken care of it. Branch manager is so busy with his business and butchered with the reporting that he doesn't have time to look at these aspects. And we cannot fall into such arguments for the purpose of our certification. And therefore, my request and my suggestion to you would be, please check whether there are any cases where, review, because sometimes it so happens that the review actually doesn't take place, but they change the date only to avoid the system downgradation. Now, what is the control that branch manager doesn't do that? Now, this particular test can be taken up at least for the accounts we have taken as a sample. And therefore, list down the review pending between 3 to 6 months. If they are over 6 months, frankly speaking, they need to be simply downgraded, and check whether system has downgraded themselves. Next, are the stock and book debt statements and other periodic operational data and financial statements received regularly? Now, many times it so happens that if the data is not received, they put the previous month, but the data is not available. Here, sometimes we take a practical view if the account is running well, but it basically shows the discipline that the borrower is following. Now, in case of DP also, some of the systems, although DP calculations are done by the system, we should know that not all the banks have configured that margin percentage is not standard. So the person who enters the stock statement every month has the authority to change the margin percentage. The branch that you are operating, please check whether such authority is available. Now, it may so happen that the sanction margin is 25% and he is giving 10% only to comply with the DP norms. Now, these are some practical experiences that we have faced, and account continues to do this for a long time, and suddenly it goes into a problem. And then RBI says, what were auditors doing? Yes, agree that when you audited it, it was technically not a problem account. But RBI says, if the branch auditors are going on site, why can't they sense it? So these are certain fine points that we need to be aware of, and they are not too technical, they are not too detailed also, but we need to be aware of these aspects so that, we help the bank top management, B, regulators, both. Because believe me, the top management at the bank, every bank level is so refined, and they don't want any of such hanky-panky. Now, this is the problem generally faced at a lower level, and therefore the branch audit is conducted. So the purpose would be lost if these finer aspects are not seen. So at least for some sample that we have chosen, if we can look in, that would be a great support to the management, top management and regulators. Whether there exists a system of obtaining reports on stock audit periodically. Now, the reason this is asked is, again, all of us are aware that if the account is 5 crores and above, stock audit is mandatory. During my last 30 years of tenure of working with various bank as auditor or consultant, my observation is Stock audits. A, if the account is eligible, they are not allotted. If allotted, not conducted. If conducted, report not available. If report available, not seen. And if seen, not acted upon. You will find all kinds of these categories in every branch. Number 2, branch manager would plead A, ignorance, or B, helplessness, because stock audits are not meant to be allotted by the branch. They are meant to be allotted by the zone. So they say zonal people don't have, so it's not my problem. Now, if you find that stock audits are not available, please list down the accounts and report it. You must have observed so far that preparation of LFAR is a lot of work with this new LFAR, and it really is a far more detailed work as compared to even advances now, given the fact that the entire IRAC system is now automated. So we will be able to, and we should concentrate on these aspects. So details of cases where they are listed here. Cases where stock audit was required but not conducted. All of this has been listed. So list those. Now you will observe again that these are the affirmative statements that tantamounts to we certifying in a positive way. And therefore, we need to be very careful when we sign LFAR, because you are indirectly confirming a lot of things positively and not just by option. Generally, our report is by option, but here we are concluding positively. No, we don't find these. Yes, it is right. Such statements are there. Indicate the cases of advances to non-corporate entities with the limit beyond that set. Now, you may remember that 10 lakh clause was there, that continues to be there. However, each bank may have set. So if it is a non-corporate borrower, see, frankly speaking, generally everybody produces the tax audit report. And tax audit report is not an audit, because it is tax audit report does not confirm that the accounts are drawn through proper accounting standards. Now, this is one clause which is very inconvenient to us, because in no bank's case, non-corporate entities are audited. If audits are not mandated, they are not audited. And therefore, we need to have suitable answer here, saying that if you have not found, say none of the borrowers have conducted the audit, though tax audit report is on the record. Mention the facts and move ahead, because it's a tightrope between a business and the compliance for a branch manager. Does the branch have on its record a due diligence report in the form of manner required by Reserve Bank of India in respect of advances under consortium? Now, see, in case of a branch is not a lead bank, copy of certificates report should be obtained from the lead bank for the review for the record. Now, it is mandated by Reserve Bank of India that lead bank will provide all these aspects. So branch manager cannot plead ignorance, nor can he plead the administrative lapse. If he is maintaining the account, it is necessary that he has these reviews on his record. Has the inspection or physical verification of securities charged to the bank been carried out by the branch? Many times officers do conduct, but at the same time, the observations thereon are not taken care of. So in case, in case of the accounts that you have chosen, these aspects, some of these aspects must be asked specifically and taken care of. Whether there is any substantial deterioration in the value of the security. Now, we know that there is a difference in the provision as far as the first year of concern, where if the deterioration of the security has taken place below 50%, it should go to D3, and if it is 90%, it should go to loss. Now, therefore, if it is a secured, branch must ensure that the proper security valuations are on record. There is one more thing I would like to mention here, that if you see the policy of the bank as to what kind of a report, valuation report they should obtain, because many times there are 3 types of valuation rates given in the same report: A, market; B, realizable; C, distress. Generally, for the purpose of such accounting calculation, realizable values are taken, market values are never taken, and distress values are taken only when they are actually accounted, slipped to the NPA. So if it is a running account, realizable value is good enough, and therefore these are the fine points, and these are this very aspect that matter when the account goes bad, and if it turns fraud tomorrow. That is where auditor comes into picture, or whether auditor for that year has it checked this, whether of that it may be 3 years later, but yes, people would comment that all these auditors have not done their job. So I will move, because some of these aspects, even though you have a system-based identification and provisioning, you still cannot sometimes capture, or systems can be camouflaged, and therefore the auditor on site matters. In respect of advances examined by you, here it is specific. Have you come across cases of deficiencies, including value of security and inspection thereof, or any other adverse features such as frequent unauthorized overdrawing beyond limits, inadequate insurance coverage, etc., etc.? Now, what has happened? I have covered such odd cases, some instances in my presentation next. So I will address these aspects when I come to it. Otherwise, it would be duplication. So I'll move on. Now, whether the branch has red flagged accounts. Now, this red flagged account also I will take up later. It's a detailed discussion that we need to undertake on this red flagging. Now, here is something which is unique, which Reserve Bank of India has. It says top 5 standard large accounts. Standard, sometimes, so in many branches, top 5 accounts, of which 3 could be NPA. So it's specific. It doesn't say top 5. It says top 5 standard accounts. Reserve Bank of India expects us to list down and have specific comments from auditor with regard to its well-being. Whether, all these aspects that are being discussed in LFAR, whether we have ensured and whether we see any kind of a situation that would take these accounts to sudden problem in the near future or in a foreseeable future. I'll give you one example here. One classic case in the banking industry, that has happened, almost 5-6 years back, wherein there was one account with almost exposure of 6,000 crores running so fantastically well that each banker would keep on going to that fellow from time to time, asking for some limit, asking him to take some limit from him. If not funded, please take at least non-funded limit. The account was so good. Then a time came, he started engaging the retired general managers and EDs of the bank to give authenticity to his board. And account was running nice. And at a given point of time, once he says, I would like to leave my company to be run by the professionals and would rather not influence any decision making. And therefore, I would like to resign from the board and just be a shareholder. And he started moving out of country. And one day, suddenly, the remittances stopped coming from abroad and the company was in hurry. Now, this happened over almost. However, time of exposure.
Sir, your voice is breaking, sir. Voice is not clear. I think sir has logged out. Sir, is there any issue?
So there may be a issue with the SAR signal. That's why I think he dropped off. We'll wait for 1 or 2 minutes. He will join soon.
Am I audible?
Yes, sir. Now it's fine.
Yeah, I have reached. So I'll just switch on my video also.
Yeah.
Yeah. Just a minute, I will.
Sir, we have some questions in chat box also. Please clarify those questions.
Yeah. So should I answer them now or?
It's your convenience, sir. You can do it afterwards.
I think I'll do it later.
Okay,
if
sir.
everyone is, so that I don't miss my flow.
Okay, sir. Sure, sir.
So now just yeah. Now, in case of a leasing finance activities, has the branch complied with the guidelines issued by the controlling authority in respect of their inspection? Because in case of leasing finance, etc., what happens? Debtor sales is the only security, and the same security is given to various facilities given. So many times, there could be overlapping of security. RBI has issued a master circular I have mentioned here. Okay. Further, the exposure norms also suggest the cap of lending such activities. It is necessary at the branch to understand the correct categorization of advances and whether such instructions from the controlling office has been followed. The error in categorization has an impact on the disclosure of exposure. So this is very crucial, but in my suggestion would be we should take a representation from the branch in this regard. Has the branch identified, classified advances into standard? All of that is now, actually this will also may undergo change next year, because this further would change. So in my opinion, I don't have to explain this because it would be taken care of by the system this year. But yes, you will have to ensure that the system is working properly. Now let me come to the next question. Now here it says list the accounts with outstanding in excess of 10 crores, which have either been downgraded or upgraded with regard to their classification this year. So both downgradation and upgradation. If you have any account with 10 crores and above, please look at them separately. This question expects auditors to select all the accounts about 10 crores and ensure that this classification is done correctly. Imagine the kind of detailed reporting RBI is expecting, and therefore the erstwhile LFR, like I said in the beginning, simply taking the last year and moving forward is not possible. Now, whether RBI guidelines on IRAC have been followed, it's a very overreaching question, and in my opinion, it's part of your opinion only. Here are the cases where, but issue would be, see, branch level, the provisioning doesn't take place. And therefore, sometimes it may not, branch auditor may not feel it necessary or so critical for his signing. However, for the purpose of bank, a branch auditor is critical because these aspects are available only in the branch. And therefore, valuation reports are very critical for the purpose of value, arriving at the provisioning. And therefore, ensure that your valuations here, again, now this is about recovery. So, like I said in earlier cases, you'll have to see policy as to what type of valuation needs to be there, whether market, realizable or distressed, and whether it is not more than 3 year old. So more than 3 year old should be straight away taken to zero. That's what Reserve Bank of India says. Next, in case examined by you, has the branch complied with recovery policy prescribed? Okay. Details of cases of compromise, settlement, write-off cases involving write-offs above 50 lakhs may be given. Generally, you will not find this at a branch because such an authority is not given to any branch. It either goes to recovery office or it goes to central office, and write-offs are taken place only through them. However, this clause is kept here only as an abundant caution. Execution of decrees. Again, this may not be the prerogative of the branch. It is done by the departments. As an abundant precaution, this is kept here. So all recovery aspects generally are kept only because it may so happen that for some remote branch, the bank may have delegated the authority. But in 98% of the cases, this will not be part of the branch operations. Now, non-fund exposures also have to be detailedly given by the auditor. List the borrowers where LCs have been devolved or guarantee have been invoked. So irrespective whether they are standard or they have turned NPA. If you have cases of devolvement of LCs, please list here, because that shows a early signal. And in case an account where LCs have been devolved but is standard, I think we need a little magnifying glass for such accounts. So please note these finer aspects actually lead to some interpretation, and therefore our selection and our reporting needs to be careful. We need to be careful. Similarly, here the next clause that says LCs devolved or guarantees have been invoked but not paid yet. They are yet to be paid off. Many times it so happens that they are paid through new LCs, they are paid through some adjustments, and therefore these two aspects would be very critical for us. Having covered so far, I will quickly cover certain other aspects. Deposits. Okay. RBI specifically mandated certification for penalty levied by the banks for non-maintenance of minimum balance. Now, this was one issue that was raised in Parliament, and some of the member of parliaments were of the opinion that banks are actually looting the small depositors, and therefore this clause was brought in. And if you see, it is part of the appointment letter of a CSA, and then CSA mandates it to be done by all the branches, and therefore you may have to select some 5 accounts to ensure that yes, the levying of charges for non-maintenance of minimum balance is levied correctly. Although the general answer will be given, it's maintained automated by the system, it is expected that when you issue a certificate, at least have 5 samples on your record. Bills, payables, sundry deposits. Now, number of items and aggregate amount of old outstanding items pending for 1 year or more to be obtained from branch and reported under appropriate heads. Now, if you really look at, these are the high vulnerable aspects, very high vulnerable situations where, because those are the liabilities, and many times you will observe that 7-8-year-old was there last year, but suddenly it's disappeared. So what you may do, this is the second year of this LFR. You will have list of such accounts last year. You will have list of accounts this year. If you see any of those accounts do not appear or they are paid off, please see to it that check whether those reductions are valid and they are not subjected to any suspicion. This is very critical. Okay. Okay. So, does the test check indicate any unusual item or material withdrawals or debits in these accounts? Also needs to be taken care of. Now, profit and loss these are simple questions, interest checking, which I have spoken about. We need to test check few C master records, whether interest rates are being done correctly. Income recognition norm, again automated. Then next is any excess or short debit revealed through your checking. Does the bank have system of eliminating or providing interest accrued on overdue? Now, it used to happen that suppose if some account is loan account is against FD and the FD remains like that. So say 7% or 9% FD was there 5 years back. Slowly, the new FD rates, go down. But your or they go up, for example, but your OD interest continues to be the same. So the norms are 1% above the FD rate. So obviously such a thing creates a problem. So these aspects need to be taken care of. Books and records, MIs. Yeah. Now, if you have done branch audits earlier, you would know, that bank has a very detailed MIS working. Each branch manager operates and controls his branch to various MISs that are generated. However, it is general observation that such branch manager doesn't have time to look at it. So quite a few aspects get revealed in those MIS statements, and therefore we must ask for those MISs. So typically, MIS reports generated at the branch level. What all things it contains? One important thing that it contains, one MIS, is about the account information. It's called different in different bank, and therefore I won't be able to give you any terminology. Somebody calls it a blue statement, somebody calls it an account information, somebody calls it, some A4, 3-4, B4 statement, some technical language they take up. But this particular MIS actually gives you a complete picture and you can say X-ray of the entire branch. Each account, it will show you, the value, transaction summary, security, DP, repayment schedule dates, everything. And this particular statement would be extremely helpful to you for your selections as well as for your conclusion. Besides this, exception reports such as review renewal not done, So quite a few things that we are talking about in our LFAR would be available through these exception reports. The issue is whether you have gone through those and whether you have given necessary cognizance to those reports in your opinion. Reserve Bank of India, when they take out information through these only, and then they come out with the observation saying that why auditor has not done. Now, stress borrower related. Now, this is very, very crucial for our selection also, because SMA 0, SMA 1 accounts, if you look at, if you take generally some 1 month or 2 month old statement, so SMA 1, SMA 2, if they continue to feature subsequently, they would get downgraded. But if they have upgraded, or if they don't fall in SMA category now, that means recovery has taken place. Such cases could be selected for the purpose of our verification whether the recoveries were genuine, especially if the accounts and amounts are material. Early warning signals related transactions taken place. I will talk about it subsequently. Now let's discuss, this is also a clause in LFAR, and it is a very significant, critical and crucial from the Reserve Bank of India perspective. This just doesn't talk about the frauds detected, but it also talks about early warning signals, and it also talks about red flag accounts I was talking about earlier. So that is RFA. So let me talk on these aspects which are very crucial now as a branch auditor. Now, frauds detected, classified, but confirmation from reporting. Now, many times the frauds are detected. Branch manager will say, I have reported. He will show you a slip, I have reported. But it is observed that it goes from branch to say zonal office or head office. Ultimate reporting to RBI may or may not take place. And therefore, at a later date, when the Reserve Bank of India slaps penalty, the question is asked, why was it not reported? How come auditor certified that it is reported? So please ask for the confirmation of reporting to RBI, because confirmation, RBI gives confirmation of fraud reporting, and that confirmation must be taken on record by the branch manager. So mere reporting by branch manager to controlling authority is not sufficient. And this is generally a game played by the bank saying that, okay, I have reported. You don't go to that zonal office to audit. So obviously, you will say everything reported. But if you mention here that the branch has done it, no confirmation is available, that would be a complete report. Whether any suspected or likely fraud cases are reported by the branch. Now you will also know that STR and CTRs are generated every time. And if any account pertains to that branch, it is reported, and then branch reports those transactions to the controlling authority. You have to ask your branch whether there are any such cases reported by the branch in the current year. And if yes, ask them to provide for the details there. If it is more than 6 months, it's a serious problem, because generally within 6 months, the suspicious transactions, investigation must be concluded and should be concluded as whether it's not a fraud account or it's not a fraud. If it is a mistake or it is a it's not an unusual transaction. So that needs to happen. You know, sometimes within the 6 months of opening account, some few crores come in. Now it could be genuine, it could be engineered, but the fact that within 3-4 months few crores get deposited suddenly in a saving bank account gets a trigger for suspicious transaction, gets reported. Now it should be concluded that no. So the investigation is taken place and then it is concluded, okay, fine, so and so money was genuine, etc., etc., etc. So AML aspects, fraud aspects, all of these get covered under this. Now we will talk about EWS framework and RFA. Now what happens? Any account. Now it's a fantastic concept, frankly speaking, and although by virtue of Reserve Bank of India guideline, it applies to only accounts which are 50 crores and above. RFA by definition applies to accounts which are 50 crores and above. And therefore, you may have 1 or 2 accounts or no account in your branch. However, in my opinion, knowing, understanding this RFA concept is so crucial for our audit, our branch audit, and we could apply these principles to an account by lowering the threshold from 50 crores to whatever your branch, because that would give you an effective audit tool for the purpose of reporting. I'll explain that. I have explained that in future, in forward slides. So I will cover the LFAR aspect here and then go to that. In respect of fraud, based on your overall observation, please provide your comments on the potential risk areas which might lead to perpetuation of fraud. For example, now this entire thing is one clause in LFAR. Just look at it. Falsification of accounts, false representation by the borrower, misappropriation of funds, especially through related party or shell company transactions. Now, these are not very difficult. I'll just give you one example. Last year, 2 years back rather, I was auditing a branch and there was one account with 400 crores exposure. And the branch, it was one of the top rated account in the branch. So I tried to, when I was looking at, I could see that during this year, the funded limits were going down and non-funded limits were going up. 400 crore account. When I went through the transaction, when I went through the review report, I realized that this company, 80% of the purchases and 100% of the sales was to a related party. 80%, see how we should have our interpretations. 80% of the purchases and 100% of the sales to Dubai company. Now sales to Dubai company was increasing and therefore the non-fund limits were increasing. So basically it means that you are not funding this company. You are actually funding their companies, related parties who are not your clients. So this could probably be a shell company. Interpretations, how we should take, because technically, if I were to look at, it was a very good running account, very good. However, I could see this problem, so I raised this. Now, what happens to it subsequently is a secondary matter. But yes, we could raise this issue. So we should have an eye on such aspects when we are actually conducting. And that is what Reserve Bank of India tells us, that don't just look at the lines, read between the lines. Sometimes debtors list continues to be the same for years. Same DP. Now, please note that if these accounts go bad, the Reserve Bank of India heavily comes on the auditors. It's time for us to be completely ruthless in terms of ensuring that the compliances are done correctly. So, overstatement of invoice, stock statement, everything, they have not left any stone unturned in detailing as to what they want in this. A supervisory point of view, this is what Reserve Bank of India had come up with during their discussion with us. Accounts closed to open new accounts. Basically shows camouflaging of rollover, evergreening, SPVs. So the one which I spoke about was nothing but a SPV. Okay, enhancing for fund-based limit repeatedly, change in DP multiple times, converting non-fund to fund, ad hoc sanctions, transfer of funds between the intra-group companies. Now, these accounts may be operating very nicely. However, these are the causes of a fraud or divergences between the auditor assessment and Reserve Bank of India. And therefore, we also need to be looking at it from that perspective. Now, SF40, if we were to look at, the auditor's responsibility is relating to fraud in audit of financial statements. Basically talks. I would ask or request all of you, I think it is May 7, 2015 circular, a framework, okay, for loan frauds, red flagged accounts. If you go on the RBI side, you will find this. And I can tell you it's a fantastic, this is one of the fantastic circulars that Reserve Bank of India has come up with. They have listed down some 45 situations for the purpose of red flagging of accounts. Although it is applicable, again, I'm telling you, for 50 crores and above, if you look at those situations, that becomes a fantastic guideline for us as an auditor also. Summary, if you look at the number of frauds are increasing substantially, all banks put together. Now, observation from Reserve Bank of India says about 90% of the frauds in terms of amounts involved are happening in the credit portfolio. Okay. 50 crores and above were 80% of all the frauds. And therefore, you will also observe now Reserve Bank of India came up with a notification and a direction to all the banks last year that if you have a borrower who has opened a current account with other bank and enjoys facility with your bank, you will simply write to that bank and get that closed. And that bank will have to close that account. Now, what happened? Many of these private sector banks, they started again camouflaging this circular by saying, okay, keep a 5 lakh rupee deposit and we will keep it under OD. So it's not a current account, it's OD. Now, if your borrower has any accounts outside the consortium, whether OD or that's actually a signal for you. And if there are transactions, if that account is not reported, in my opinion, such account should be subjected to further review or should be part of our severe comments. Delay in recognition of reporting of frauds. Okay. Is mainly caused because advance related frauds often seasoned for 3-4 years. Bankers are happy to provide. Bankers are happy to downgrade because fraud reporting has a severe repercussions. And therefore, many times they show NPA, keep on providing, satisfy auditor that, oh, I'm providing. And somehow we auditors have been so over obsessed with the provision that we think if things are provided, everything is hunky-dory. That is where Reserve Bank of India says you are actually promoting frauds because they have understood the loophole in this audit system. And therefore, Reserve Bank of India constantly keeps on harping on moving beyond only NPA marking and see if you think that it could be a fraud, especially in case where security value has substantially gone down. In my opinion, it should be investigated with the intent whether it's a fraud. Okay. Delays in reporting CRILIC. CRILIC, all of us know, if an account is 5 crore and above, and if it slips into SMA 0, even if it slips into SMA 0, it needs to be reported under CRILIC. So what bankers do, SMA 0, SMA 1, they will not report. They would rather pursue the client to pay off and bring it out. Now, such practices actually create a room for the borrower to further go down. And the right decisioning with regard to that particular borrower is not taken up only because such delays take place. So we'll have to be very careful in ensuring that such procedures, although may not have any, forget about being material, I would say any impact on the financial reporting that we do, it has a severe impact on us as vigilant auditor. And broadly, as chartered accountants, they will say, finally they'll say what chartered accountant was doing. It's a common thing that we have to always be on the receiving side. So any amount of delays, if you look at on compliances with regard to identifying this problem, actually create a big issue. Here, it's necessary for us to understand. RBI has advised IBA in place and to place an enhanced web-enabled third-party enterprises reporting and disseminating system. Basically, it means some of us, if we are into loan arranging business also, and if you have introduced any account to any bank, and if that goes bad or a fraud is committed, there is a registry maintained by IBA as to with whose reference this was done. And if so, we need to be careful on so many different accounts, and we should be very vigilant when we are actually dealing with these banks. So they have given these various aspects, liberal cash flow projections, especially when the banks are restructured. It always, they will always have very liberal cash flow projections, security perfection, overvaluation, gold plating of projects, deviation from the credits, and overrated, other related policies. Now, when you find these things and the bank has given passage to that particular client, in my opinion, such an account should be highlighted. All we can do, finally, we are reporters. All we can do is simply make a mention of that account as you think is a weak account or may lead to some problems based on past experiences of that particular borrower's transactions. So, there are several such things which are actually given by Reserve Bank of India. Now, this is another aspect. This 45 items that I spoke about, actually, these are some of the things which I have listed for the purpose of our discussion. So, critical issues highlighted in the stock audit reports, but not taken cognizance of. Poor disclosure of materially adverse information. Now, frequent change in the scope of the project. Liabilities appearing in ROC search report, not in the annual report. If you find such accounts, they come under early warning signals. And therefore, I suggested that although technically this particular circular applies to only accounts which are 50 crore and above, in my opinion, we should take a note of this circular for the purpose of our audit and lower the limits for the purpose of our audits. Because this would give you a complete, thorough grip over the branch operations for the purpose of reporting. I think I have, I'm coming to an end. Would like to mention one more thing is last year onwards, like I said, we have the Reserve Bank of India started ICFR reporting. So your branch may form part of the branch selected for the purpose of IFCO-FR. If that is the case, then yes, we'll have to actually give that certification separately. Okay. So this is how our branch audit and LFAR actually would make us more and more responsible in the time to come. And even some of the clauses here, like I said, may undergo change next year, because based on the observations, now Reserve Bank of India is quite proactive and they are trying to update that from time to time. So let me address the questions Let me take the questions now.
Sir, the participants are free to unmute themselves and they can pose the question directly.
Yeah. Why not? Why
Yeah.
not?
Yes, sir. The voice is enabled for all participants. They are free to ask the queries. And in the meantime, you may please go through the chat box. Shall I help you out or will you go through yourself? Please
I
admit.
am going through, but if I miss, do please let me know. Okay. Yeah, one question was 10% or 50 crores advance equal to 5 crores. Is it sufficient? Yes. So if your, just a minute, sir, my battery is low. So I will just do the needful. Just.
Yes, sir. Yes, sir.
Just a minute. माझं bag and माझी bag and down. Yeah. My battery is low. Actually, I forgot to put on. Yeah, if you could take up the questions because I'm not able to see now. 10% or 5 crores. Yes, if the branch is 50 crores, LFAR says 10%, any account which is 10% of the total branch advances. So in such a case, 5 crore, any account which is 5 crores and above will have to be taken up. Hope I have answered the question. Just a minute. Yeah. Next.
I'm afraid that was the only question in the chat box. The participants, please, you can post in the chat box or you may directly unmute yourself and you can ask the speaker. Please.
Yeah, sure.
Sir, of late, maybe from 1 year or 2 years onwards, what is happening is this LFAR also, instead of the physical form, they are requiring us to make it online. So
Yes.
any special precaution with our digital signature, right? So any special precautions are to be taken in this regard, sir?
Sir, actually what happened in unfortunately, when this new was introduced, last 2 years pandemic was there. And in any case, compilation of data at the central level becomes easy because your observations, otherwise had to be manually compiled. So when you are doing it in the system, it's easy. Now, before you submit, there is a way in which this entire function, each bank will have differently, but broadly, when you enter, you are fine. But finally, before submission, you are expected to take a print and look at it. Because sometimes due to system errors or bugs, the comments get distorted or, comment of one account gets in front of the other account. Something like that sometimes happens. And therefore, this needs to be taken care of. And this year, if we are allowed to go to the branch, I would say remotely signing should be avoided.
One supplementary question in the chat box with regard to 10% of 50 crores. There, someone is asking if cash credit limits which are renewed every year, even they are also to be counted in this 10%.
Yes, yes, yes. And basically exposure does not mean only fund exposure. Sometimes I'll tell you in one of the case that I was auditing and in Delhi zone of one of the bank, this particular account was a 100 crore account, 7 crores of fund limits, 93 crores of non-fund limits. And both limits were full. Now, and there was no transaction, not much transaction. And frankly speaking, when I audited it, the non-fund limits, okay, LCs which were issued were yet to be crystallized. You know, the date was ahead. But because we could not see any transactions, we were sure that, you know, this account will go bad. So, you know, such things are getting crucial now because your NPA and everything simply is taken off. Our interpretation of the auditors has been taken off, and the system will take care of it.
Yeah, as far as this system-driven identification of NPA is concerned, is there any way wherein we can find out to which accounts the manual intervention has been enabled? Means in respect of certain banks may be having this manual intervention system wherein the classification may be modified after the system has generated its NPA list. So is there any way out as to how we can find out?
Yeah, this is a very critical question, in fact, in the current year audit, because although the deadline was 30th June last year, some of the banks are still grappling to complete it. One important thing that, see, I have also conducted IT audits for 1 or 2 banks, and we realized that configuring the non-fund transactions like DP, stock statement, your value of security going down. Now, it was not very easy for a system to capture, and some manual interventions do take place there. So it is not about A bank or B bank. All the banks are facing these problems. So in such a situation, what has happened in this year, I would say, I'm sure as far as the fund movement is concerned, probably you will not find a problem with any of the bank this year. But in respect of other observations, you will continue to have. Actually, one more thing I would like to mention here. See, with ICFR coming in, and I did mention this in one of the seminar specifically conducted for ICFR. And that is, if we were to really bifurcate our MOCs, the MOCs can be bifurcated in 3 categories. There are, somebody is asking.
No, sir. Please go on. Accidentally, they have unmuted themselves. Now,
Okay. Yeah. Okay. Now, so what happened can be categorized into 3 buckets. There are certain MOCs which are standard. Like, you know, there are system generated that certain things will keep happening. You know, they will have to be done on 31st or 1st. So some 8-10 MOCs are generated by the system. Number 2, there could be a situation where interpretational issues with regard to auditor, which involves security value. They have put a security value market value, whereas it should be realizable value, or value is there but 3-year-old. Such aspects are the interpretational value MOCs. And third one is about mistakes. Oh, I forgot to provide. Sorry. Oh, I forgot to reverse last year's provision. You will also find such observations with ICFR coming in, such that category 3 MOCs should be, in my opinion, not be there. And if you find such, basically, you may have to comment on the ICFR issue also, even if your branch is not selected for the purpose of. Because if they say, oh, that remained to be done, that I forgot to provide, I forgot to reverse the previous quarter provision, any of these things, really it means that the system are not robust enough for a branch manager to report independently without interference of the outside body called auditor. Now, this second thing will continue, and that would be more is pertaining to the question that you asked, so this interpretational MOCs will continue even in the future, and that's where the need of the branch auditor is envisaged.
Right, sir. Well explained. And we have one more question in the chat box. For small branches where advances below 50 crores, can we take up special report attached to LFR in case of our adverse opinion, or mentioning is enough in LFR column of advances above 10 crores, even though no such account in the branch? Sir, please unmute yourself and speak.
Yeah, sorry. See, I'll tell you, LFR is very clear. It says what if you are allotted 10 crore branch. Let's take an extreme example. If it is a 10 crore branch, then 1 crore and above advances should be selected. Simple. So,
sir, is there any minimum limit of percentage of the non-material accounts that have to be examined? Is there any such limit, or what will be a respectable percentage of non-material accounts to be verified?
Last 2 years back, when this pandemic started, okay, now I can't answer this straight, but I can answer this through inferences. And the Reserve Bank of India has asked that, okay, so many branches should be covered, and 20 crores and above, then 50 crores. We were debating all these years, you are aware. Okay. Now what Reserve Bank of India says, that they will be fine if 90% of the advances are taken care of. Now, in a branch, in a 50 crore branch, if all the accounts are retail, frankly speaking, it's not possible. So what you may have to do, each product wise, if you go, and then take a sample accordingly. So because the system within the product will not differ. And therefore, generally, we ensure that 60 to 70%, is taken care of, because that 80-20 formula is available. Every branch, 20% of the accounts will have 80% of the value. So even if you take that, I have been taking a norm that if I reach above 75, I'm fine.
Can you please explain the latest circulars, RBI circulars which are released should be considered by our members while conducting bank audit?
Madam, there are several such, okay, but I would like to specify here one which is important one, and that is the pandemic, wherein first one, when the restructure was done, okay, in the first phase, okay, it was suggested that 1 year would be given, rollover would be given for such borrower. Now, the new circular has come this year, wherein for such borrowers, only 1 more year can be given. And in the second phase of pandemic, whoever have been caught are given 2 years off. That one is very crucial circular this year, because you can't apply the restructure for 2 years for all the borrowers. The other one was I mentioned during my, and that is the NPA one, which was the largest debate all of us used to have all these years. Probably the reason I actually covered more on the fraud side is probably we may have to debate, discuss, brainstorm such situation for us to keep afloat with the bank audit hereafter, because reading between the lines is becoming the normal. Our institute, our basic principle, I say, we are watchdogs and not bloodhounds. But frankly speaking, the regulator is expecting us to be not bloodhound, but at least a vigilant vigilance officer. So they expect us to go beyond the written laws and help them. The way Reserve Bank of India is interviewing auditors, I can tell you, for us every quarter, and after the audit is over, they actually conduct a very detailed with specific areas that you have undertaken for audit, and they grill you on many issues. They ask you specific on how have you gone about, how have you ensured that the reporting to you from the SBS is in line with your thought process. There are a lot of things that they are expecting. So they are basically expecting us to be part of their ecosystem. And they no longer want us to be helping business. If you want to help business, be their consultant. Don't be their auditors. You don't worry about, whether the branch manager will be put to task, or the bank will be put into trouble by the Reserve Bank of India, or the account holder will unnecessarily get into trouble. That's not your worry. And that is why in my initial comments, I said the top management is that ruthless. Actually, if you happen to talk to any of the top layers of the bank, they are that ruthless. The problem is the branch manager and zonal manager. They will try to protect because they have to maintain the relationships with the borrower. And that's where this conflict is arising, and therefore need of the auditor. But at the same time, I must tell you, in many cases, as a central statutory auditor, I have reversed the observations given by SBS, because the interpretation are far too extreme based on imagination, or sometimes they are not, they go beyond a particular a boundary of the time. I've come across a situation where one of the SBS said, okay, this account, he went 5 years back, and then in that year this was happened. So if this was to be done that, then by this time it would have been this. So see what happens. It becomes very critical. All we should know last year's closure, whether Reserve Bank of India has given any adverse comment on this account. No, accept last year's verdict and move on. We don't have to go beyond so much far off also. Sometimes, you know, there are trivial issues that arise. Okay, for example, I would tell you, and this is a practical thing which Reserve Bank of India also accepts. And in fact, the circular also talks about it. And that is, say, stock statements not received. Now, many times we would say, okay, get me the stock statement, get it on the record, and go ahead with. Okay, have that record. Okay, fine. You please have a comment. You are free to comment, but you don't have to actually be overreaching to say, no, I will go by the line. No. So practicalities have to be considered, but to the extent where it is permissible. Because Reserve Bank of India circular also talks about there are situations where there are temporary deficiencies. So the example that I gave just now actually falls under temporary deficiency. And the leverage is given to the management. So consider that also. Right. So we need to be little broad-minded but focused on what we have to deliver. That will help.
Right, sir. We have one more interesting question in the chat box.
Yeah.
Bank has mentioned in the appointment order that they are not giving management representation letter to branch auditors, but are giving to the central auditors. Now, what the branch auditor should do in such a situation?
Oh, such a... In that case, I would say it's a limitation. It's a limitation posed on the audit. And if they have specifically given this, in my opinion, we should be upfront in our observations that this is what we have done it with these limitations. These are the... There is a column in LFAR that talks about other comments. Wherever such representation is not available, you please mention that. If they have put it on the record, you also put it on the record. So your audit is subject to this, and no representation is given.
Right. Thank you, Sandeep sir. I'm afraid we ran out of the queries in the chat box.
Yeah. Thanks.
And also, I'm afraid myself and my chairman also ran out of queries. So
no problem. Sir, actually, the thing is, all of us have been seasoned for so long. So, you know, only nuances need to be discussed.
Yes.
So, I understand.
And a recap from experts like you, just not only will be understanding the way in which it has to be done, but you will all be having the experience of dealing with the higher authorities or dealing with the central statutory audit, so that we will be enlightened by these things.
Yeah.
Thank you very much.
Thanks a lot. Thanks a lot, everyone.
Madam, a word of thanks from you to the speaker.
Thank you for detailed presentation with so many practical examples also. We had a wonderful session. Definitely our members will have value added with your presentation. Thank you, Ananda. And I request you to share the PPT, sir. Members are asking for
actually,
that.
I forgot. I spoke in the morning, but
if somebody was sitting in front of me.
Problem, sir. We have already created one WhatsApp group for all of us, no? For all the speakers.
Immediately after I close, I will send you this.
Okay, okay, sir. Thank you so much.
Also, a quick programming note of tomorrow's session. Tomorrow's session will start at 4 p.m. Friends, please take note of the scheduled program of tomorrow starting at 4 p.m. I request all of you to join at 4 p.m. sharp. Signing off for now. Thank you.
Thank you.
Thanks a lot. Thanks a lot, everyone.
Thank you.